Hey, welcome back. Thank y'all so much. Today was a difficult day. Gonna jump right into it. So, looking at the 1 hour, go over here to Robert Hood Legend, show you what I was looking at. So, so right here, price for Qs, price was up, then dropped down right before open. Price was stuck right here in the band, so that was a no trade on the Qs. Looking at SPY was stuck as well. It had actually just clipped the bottom of the band. So it was right at that clip, right below. And so I was debating on if I wanted to take that trade or not. Then over on Dow Jones here at the bottom left, price had already come out right here at 7 o'clock. And so then if we look at I, IWM, Russell 2000, price had dropped as well. And so these two at the bottom, Dow Jones and Russell 2000, were the two that I was looking at taking trades on. And so I actually went with the Dow Jones. Um, and after I was in the trade, I was realized that the Russell 2000 had a tighter consolidation, which would have offered a more explosive move. And so, but anyway, I took the Dow Jones US 30. I took that trade, this DIA, as the trade that I took. So jump over here to the charts. 1 hour, there's that consolidation at the top there. Price had broke. This is 7 to 8, and this is 8 to 9. So 7 to 8, we had a nice strong candle here. That was below the Bollinger Band. It was tapping into a 4 hour key level. And so then drop down, consolidation is still there. And let's see, go back to the 1 hour. Here we had the uh, London orb, 1 hour orb. Price was below that. So that was an indication for me to sell. Um, Price had fallen below the band. So below the 1 hour London orb and the Bollinger Band on the 1 hour. That's an indication to me to sell for the day. All right. Here we are on the 15 minute. This 15 minute, we are looking at that consolidation, looking at that orb, looking at price falling down. It's below the Bollinger Band. Price fell again, pulled back, continued to fall, and then now it is on its way back up to the orb. It's touching the bottom of the London orb and rejecting right now. So this could be an opportunity to sell the position. However, looking at price being above the Bollinger Bands right here, it's not a trade opportunity for me. So going to the 5 minute, this is what I saw. So right here, price broke. And then on this next candle, I believe this may be the candle I got in on right here. That's that 835. Let's check Discord on that. Discord, DIA for today. Let's see, right here. All right, so 837 was the candle I got in on. Then I scaled into a second contract and then went ahead and closed both of those contracts at 903. So 837 was the scale, was the entry 837. So this is the 835 candle. So then here, if we drop down to the 1 minute, we can see where the scale in happened. So right here, if we look 32, 33, 34, 35, 36 on the close of this candle with volume, that was the entry right there. So if we go short, okay, and we want our stop to be on the opposite side of Bollinger Band. That's that. And then if we look to a higher time frame, we will be targeting. Let's see what our target would be. So here we have previous day low, and then we also have a 4 hour level here. This 4 hour level, key level would be a 5 to 1. Previous day low would be a 1.78. So it's more than 1.5. We can go with that 1.78. And so looking at that, let's go back to the one. So yeah, we took the entry on the 5 minute and then we scaled down to the 1 minute, right? So we're looking here. This candle was pushing bearish, good volume. We scaled down to the 1 minute, 5 minute. Sorry, let's get it right. All right. So again, 5 minute. This candle closed bearish. This 835 candle closed bearish. Had good volume. Okay. And then it's below the Bollinger Bands, below the moving average. We scale to the 1 minute. And so from here on the 1 minute, we're looking at 835, 36. And so on the close of this 836 candle, we will enter 837. And so again, we have good volume, a good bearish candle. We entered. It went into drawdown slightly and then went into profit and then basically went against us in the opposite direction to the top side. The exit came at what time do we say that exit came? 9:03. So 8:55 was a scale in, and then 9:03 was an exit. So 8:55 is here. 8:55. So this 8:54 candle here closed below the Bollinger Band. And then we entered again as a scale in opportunity. Volume is not there. So that should not have been a scale in. So that's a false entry on our part. And so then price immediately went against us and we exited the trade soon after. So sooner than our stop would have taken us out. Okay. So we exited right here on this bullish candle. Let's go back. So on this bullish candle right here, it broke, even though the 856 bullish candle broke, volume is picking up. 858 bullish candle broke above the Bollinger Band. Okay, volume fell off, and then here at 9:02, bullish candle broke. Volume still hasn't kicked in yet, but we went ahead and took our exit on the close of that candle and got out. And then, as you can see, price just continued. It knocked us out anyway. Price continued going up. So then what happened is once we took this exit, we switched over to IWM. And let's take a look at that chart. All right. So here's IWM starting off on the day. Looking at the Bollinger Bands, price fell down yesterday, went back into the band. Pre-market, we have some consolidation right here. Okay. That consolidation, let's see, consolidation on the 1 hour. Okay. And then also to the London orb, mark that up as well. Price is below the 1 hour London orb. So we're looking to sell. We drop down 15 minute. There's that consolidation zone. You see it clearly there. And so price at the open immediately fell hard. It flushed and then it started retracing. and it's been retracing all day. So uh, we entered for a sell opportunity. We dropped down to the 5 minute. Let's see where we entered for a sell opportunity. Um, go back to the Discord. Uh, IWM for today, 919. The trade went against us immediately, losing 20%. 923, it notified us again that it was 20%. And then 924, we went ahead and exited the trade. So we were in that trade 5 minutes. Um, let's see. So 919. So here we are. Move this over here. 919 right here. So looking at these candles, volume hadn't kicked in yet. So again, false entries. Looking at the tail, sellers stepped in here, pushing price down. That's 910, 915. We have a doji here. And so before this candle closed, we entered the trade and it immediately went against us. We go down to the 1 minute. 919 is right here. So right here, we see price coming below the Bollinger Band, and it's angled up in a sense and sideways. So there's, in between the bands, there's no trade zone. Came out right here, 917, waited for the next candle, 918, closed as a doji. Volume hadn't stepped in yet. And so right here at 916, volume was pretty good on the 1 minute. But remember, the 1 minute is for a scale in, not your entries. And so because we weren't in the trade yet, we shouldn't have taken this trade. Took it anyway, and now we see what happened. Price went against us immediately, right? So see what time we got out of it. 924 we got out. So 924 closed at 922, broke above. 923 closed. We got out the trade at the close of this candle. If we go back to the 5 minute. So 915. So 919 we got in before this candle finished closing. It went against us. 920 and 925. So before this candle completed closing, because we saw volume here, strong volume, and this is the 5 minute, we went ahead and got out of that trade. And as you can see, price kept going up, going up, going up, and going up, going up. So we got out of that trade and just tried to protect the capital. And so the first trade, based on the loss, that was frustration. The second trade, basically, we were overconfident and ignoring structure and just got a shock to our system. And so then this final trade was based on revenge trading, and we jumped in this trade out of anger, right? So this was going to be a Dow Jones trade, and check the time that we got in. Let's see, Dow Jones. Uh, Bench trading. So this was what time? I guess I posted these backwards. Let's see. No, no. Uh, let's check Robinhood on that. Let's see. Let me check Robinhood. Give me 1 second here. Count history. So this last trade, we entered at 950 and we got out of the trade at 101. So we were looking to swing this to the downside. So 950, 950 right here. So at the close of this candle, we had this wick seller stepping in, pushing price down, ignoring that it's touching or running into this 4 hour key level. We ignored that. We saw the previous two candles, strong candle, medium candle, and then we saw sellers step in and push price down. So we entered on the close of this candle at 950, and volume was not nowhere to be found. And so price did initially go in our favor, but it ultimately turned and went against us. And so at 1 o'clock, 101, we got out of this trade. We were looking to swing this down, and based on the higher time frame, if we go up 9:30, 9:45. So looking at those two strong candles pushing below moving average and Bollinger Bands, we were looking to capitalize on that and continue pushing price down, and that did not happen. We go up, looking at the 30-minute here, big strong candle, rejecting the moving average. It's below the Bollinger Band. It had fallen below the 4-hour key level on this time frame. Volume is above the moving average at the bottom here. And so again, we were looking to swing that trade into tomorrow for it to continue falling, and that did not happen. Price immediately went against us, and so we went ahead and took the exit on that trade. Um, and then looking at the 1 hour, when we first got here, looking at the charts, this is 7 to 8. Price dropped below the Bollinger Band. 8 o'clock, buyer stepped in and pushed price back up. 9 o'clock, seller stepped in and pushed price down. So we were looking to basically enter on this and look at volume being above the moving average. So it's pretty significant volume. Look at 82,000 in volume. So uh, we were looking to go with those 82,000 to the downside, and price immediately went against us, and we got stopped out on that trade. So again, this was a revenge trade, just based on anger and frustration. Uh, we got into the last trade as a revenge trade, which turned into a self-sabotaging opportunity for us. So we really did self-sabotage ourselves today. Uh, and we just got to focus on discipline. As long as we can be disciplined, we can overcome these downfalls. So that's all I got for you. Thank you guys, and see you next time. Peace.